It's not very often as traders and investors that we see a 100% statistical fact, but in today's video, we take a look at the post-election pump and what it means for us as traders and investors. Are things going to get better, worse, or are we going to see a sideways market? In today's video, we take a look at the good, the bad, and the ugly from a data, big dark pool transaction, and options perspective. And boy, oh boy, there are a lot of transactions going through this market right now. With consumer discretionary absolutely going ballistic against staples, we know that it seems to be risk on, but it could be some other areas of the markets that you need to be looking at right now. So we'll break down stocks, commodities, and cryptos in our special weekend edition. Join us, guys. This is going to be one not to miss. Well, welcome back everybody to the special weekend edition of The Daily Show. My name's Tom, and in today's video, we need to talk macro, leading indicators, and of course, the hottest charts for the next couple of months. Why? Because a sea of green like this means a few different things for us as traders and investors. First up, I wanted to go over to how is the sentiment looking in the markets. Do we have people all agreeing with each other, or is everyone confused about the next 12 months? Well, as we can see here, we posted over on our X account, links in the description down below to follow so that you can get some of the latest charts that we do post out there online. And you'll notice that everyone's confused over the next 12-month targets. Some people are looking under 5,500. A lot of people are looking in the middle between where it is right now, and some are going ultra bullish, with some people now marking out 7,000 plus over the next 12 months. Now, should we see this as kind of like concerning or not? Well, let's take a look at the stats since 1928 when it comes to the S&P 500 return and non-recessionary years. Yes, if we started from October 30th, which we were sitting around 58.41 on the markets, we would have to expect to the year end at 62.09 as the average kind of target. Now, as you're about to see, it could be even better than that over the next 3 months. And there are some stats that you just cannot miss, because 100% track record in similar scenarios is pretty mind-boggling when you think about it. Let's go back, though, to the beginning. Fundamentals. Are the markets cheap right now? Well, probably by anyone's metric, not really. If we take a look here at 25-year forward PEs, and this chart, by the way, is over on our X account, links in the description so you can get those, you'll notice here that a lot of sectors are actually trading above their 25-year averages. Now, is this something you need to be concerned about? Well, of course, it means that we're getting into a period of time now where you've got to start questioning everything into 2025 and 26. Now, does everybody feel bullish right now? Absolutely. Why? Well, we're in the Goldilocks zone. Tax cuts, new regimes, total changes in the markets, and of course, basically small caps are coming up, which is going to make people eventually FOMO in. And what we know right now is we know we're not seeing the levels of margin taken by Wall Street and retail investors that we've had in similar bubbling periods. So is there more room for growth? Well, absolutely, you would think. And you can see here that what directions do the AAII members think that the market will do in 6 months? Most people are bullish, but there's still a lot of neutrality and bears out there. Of course, we will get these reads over the next subsequent weeks and see whether we've got any kind of FOMO really coming through. So what about this stat? What if we consider non-recessionary years and we consider a third month forward return when we've already had 2 weeks prior having a pretty strong growth? Well, as it turns out, when you combine both of these together, you end up getting 100% track record of a very nice gain of 7.2% over the next 3 months. Now, that would take the S&P 500 to around 6,300. Now, that's kind of mind-boggling in itself when you think about where people believe the market should be at. So have the earnings really met up to expectations here? Well, really, all of this is just in line with all of the data statistics that we've been talking about on the channel recently. When we've had gains and gap ups since the election like we did, then we usually go into a very solid 3-month return. Again, the mean is 8.8%, probably no surprises there. When we take a look at the Russell 2000, we can also see that when we gap up 5% like we did, and we look at the next 3 months of returns, it does seem to be even a better sector. And this is what we call the post-election pump, but really it's the 2016 playbook starting to play out again. And as you'll notice in a moment, it looks like we're following a very, very similar path, which could mean that we're on for quite a long ride here in terms of these markets. Whether you go to semiconductors, small caps, transportation, bio, banks, retail, steel, or anything else, you'll notice that generally the markets that you start to see weakness in the economy, well, do any of these look really negative to you on the chart? And if the answer is no, then of course, yeah, you wouldn't really see weakness here. And of course, this chart is due to Grant Hawkridge over on X if you want to follow him. And I always like that. It's called the canary in the coal mine indicator. And we always look at a few of those ourselves here on the channel. Why? Because they do show what tends to be a weakness in debt markets. And we just don't have that at this point in time. It's expected that deregulation is, of course, coming through. And that's going to be a big deal for specifically the regional banks. So let's now take a look at the post-election bump, whether it be 2016, 2020, or 2024. In each year, we've always had this post-election pump, at least over the last kind of decade. And the reason why this is important is because it tends to affect the Russell 2000 the most, especially now that we know that we're going to most likely get a rollover of course, those corporate tax cuts that we already saw back in 2016. So will it fade? Will it give a pullback in early 2025? Well, the answer is most likely yes, but any pullbacks that happen over the next subsequent weeks are more than likely to be bought up fairly quickly. And the answer really comes back down to seasonality. This is a period of strength, then we get a period of sideways or even weakness, and then we tend to continue to run into what people will be calling a bubble if they aren't already. So let's take a look here at also 2016 election years versus where we are right now. Are we following a similar track? Well, as it turns out, we certainly are. Indeed, the areas that you usually want to be in over this period have been the Russell 2000, the mid caps, which we saw huge dark pool transactions on over the last couple of weeks leading into the election, and of course the financials themselves. These all tend to benefit. What doesn't do so well? Well, initially, staples, utilities, healthcare, real estate, and materials. And again, the market seems to be kind of synergizing and mirroring this particular trade. It's like they expect very similar policies, maybe even to create even more gains for those particular sectors. What about margin debt? Is that something we need to be worried about? Well, we're hitting an all-time high on markets and we're not hitting an all-time high on margin debt right now. So should we be worried about a bubble popping just yet? The answer is quite simply no. Now, will we alert you to when that possibly does happen? Absolutely. Of course, as a community here, we always look together to find these particular results. But in light of what has just happened over the last week, you have to suspect that there's going to be a sugar rush in markets. Now, a lot of people in the comments down below have said something pretty smart. This isn't going to end well. That is probably very true. And of course, it'll be up to us to figure out when is it going to go bad. And I doubt it's going to happen anytime soon. But of course, during 2025, during 2000 and even 26 potentially, we need to be on the lookout because there will be times when you're going to be freaking out in these markets. And remember, when everyone's feeling good, you do need to start to put those blinkers on. Caution, 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 especially with people that have 5 to 10 year outlooks. Things look good now, but they may not even as early as next year. Now, where do markets look good? Well, if you've been watching us for a while, we have been loving Bitcoin. Yes, we're not a massive Bitcoin channel, but we do talk crypto every day. Bitcoin, usually Ethereum, a few others now, because things are really doing well. The post-election pump is a big deal for specifically crypto markets. And of course, as I mentioned in today's video, I'll be talking about what I think the market might be doing with Bitcoin over the next 12 months. How much higher can it go? Well, the answer is, in my opinion, a little bit more, quite a lot more actually, which we'll talk about in a moment. Let's go through the dark pool trades. You can't say these guys don't know what's up. Sell at the highs, buy at the lows. Yes, absolutely. Ethereum has been going bonkers over the last 2 days. And as we suspected, we saw some large dark pool trades coming in just at the close there. And these, of course, are going to lead into effectively gap fills. Now, is this important? Yeah, we're seeing alts absolutely go ballistic across the board. And I would like to think we were absolutely on to this one, specifically looking at Ethereum and the break to the upside. Remember, that particular setup comes straight out of our day trading masterclass, which has had links in the description down below. It is replicable and you can copy it into things like metals, currencies, indices, and even stocks. Let's move over now to whether we saw big transactions coming into Bitcoin ETFs. Well, again, the answer is quite simply yes. We've seen large accumulation throughout 2024 since we started to get these. And of course, we just had a huge transaction come in near the Friday close. Since then, what's happened? We've seen a bit of an uptick in the crypto markets across the board. And this bodes very well when it comes to accumulation into a larger run. Post-election pump, everyone getting hyped on crypto, and that's starting to spread outside of the finance network. I'll just tell a story here. Recently, I was on a fishing charter, and I was having a chat to some people on there, and they were starting to sniff out crypto again. Now, these are not the traditional people that are always in the finance markets, but they were starting to talk about it. And this has all happened over the last week. So remember, this type of stuff spreads like wildfire, tends to feed upon itself. And as we know with crypto markets, we really see that huge animal spirit type of trade. The huge bulls come in and then the bears crush it back down. So you've got to be very careful about what you're doing, but things do start to improve there. So let's take a look now at FXI, of course, the China large caps. Have we seen transactions going through those? Well, not only is earnings coming out this week for some of the major companies, but we're starting to see stimulus come from China. And on top of that, also a lot of people beginning to discuss whether we're seeing accumulation. We saw everyone sell that FOMO back in October, the early months there, and now we're starting to see a nice base structure on the markets. So it's a game of cat and mouse between the markets and, of course, the CCP in this case, and we will be updating you because this week could be a decent catalyst to either get that perfect 61.8 style entry retracement or, of course, to see a rally that now breaks this structure and moves forward. What about treasuries? Well, as we mentioned, the US 10-year is starting to look better, breaking that downward trend line in terms of finding resistance, and we saw large transactions start to form base on treasuries. Could this be a period of time where it does a little bit better? We're starting to think so, as it does look like it's getting that accumulation. As we mentioned, we're still in earnings season, and although we have economic news coming out as well, including the CPI this week on Wednesday, the PPI on Thursday. By the way, Veterans Day is open for the stock market. For anyone that doesn't know, it's just going to be the bonds market that's closed. And then retail sales on Friday. It doesn't just stop there. We've got Shopify, SEA, Spotify, Tencent, Disney, and then of course we've also got some other Chinese companies coming through. So the catalyst could be still fierce in this market, and we've got to expect wild things to occur. Now, just before we go into our normal kind of rotations, charts, and all of the key levels, I wanted to give a shout out to you guys. A few of you have been sending success, especially over the last 4 to 5 months here, of being able to think about markets differently. And I just want to mention some of these stories, and hopefully it will help each one of you gain a little bit of confidence in the approaches that we talk about here on the channel. So this one comes from Cole Demon AI, and he says, yes, this FX evolution stuff works. I've been watching the videos for a couple of years, and it's helped me a lot on insights, strategy, and risk management. Now, this is, of course, an incredible profit to loss ratio of 81.49%. But I was kind of mentioning here that this is just one of the nice kind of stories that's coming out. Now, whether it's from larger accounts, yes, I'm always surprised by some of the people that watch this channel. Some of you guys have a lot of money, I will say, but really just more the everyday, anywhere from 10,000 to 100,000 or maybe a little bit more. Have people been getting some exceptional results? Well, Jacob Saylor over here just sent me a message this week, and he said, Tom, I just want to say thank you and reach out to say that all the data you present to us on the channel each night gives me basically some edge. Now, he lost $50,000 during 2022 when he got into trading, usually going and chasing it. But there's no harm in trying that. Of course, he tried it, he failed, but this is the life lesson in trading. We've all been there before. We come in, we find the bug, we love it, and then it doesn't go so well. Well, what he's managed to do is turn it around through replication. And specifically, he's taken his account, and he's got a very nice return here year to date. But you might say, well, 30% is not that good year to date based on the S&P. Well, it actually turns out that this has been gained over here over the last 4 months. And as he says here, along with that account, I've made another 9K to get to me to the 50. And this was in only 4 months. Patience, react, don't predict. Remember, guys, come from that abundance mindset. You will do better. And I've got a lot of faith in each and every one of you out there to improve your trading and investment journey, hopefully through watching this channel over the next 6 to 12 months. Why? This could be one of the most pivotal periods for all of us in the last 20 years. And I'm actually saying that because most people don't really realize what could be happening here. We may be leading into a sugar rush that could go very badly, and we must navigate it correctly. Do we know that yet? No. But if we see the lead indicators, of course, we'll be talking about it. So speaking of which, do things look good right now? Well, they look damn good when you look at the markets. Now, if I asked you which sector has done the best over the last 3 months, you would probably not have answered XLY. Yes, consumer discretionary is now number one, and it is being distorted, of course, by Tesla, but it's still number one over the last 3 months. Guess what's second? KRE. Not usually something you would see in a recessionary period. So regional banking is doing well, and solar got trashed over the last week. Of course, it was actually doing incredibly well leading into the election, but not so good anymore. When we move over to the other markets over the last 5 days, you can see here solar the worst, gold kind of underperforming, but we've got a key level on gold coming up in today's video that we like, and KRE out in number one spot. If we look at Friday, it was a little bit of utilities and all over the place in terms of what was doing well and poorly. Let's now have a look at the S&P 500. And we'll break this down because we just hit 6,000. In our previous video, we talked about the 5980/6K level being possibly a zone of a little bit of respite from this rally. Now, of course, as you've seen today, if you're holding for a couple of weeks into months, should you be terrified right now? Not really. Why? Because the stats are pretty damn good. In fact, we just saw 100% track record in, yes, a very simplistic way of kind of looking at the data and therefore not accounting for everything else. But in similar situations, the same runs, we're looking at a potential here of 6,300 over that period of time. And most people are not probably calling for that. Now, was the advanced decline line improving? Yes. Is this good? Yes, it is. It's very strong. And we've got that island reversal gap, which is, again, a very strong in-signal kind of indicator. But let's take a look at the futures market here and break that down. Options high level for the Monday open, 60.40 versus 59.50, which you can see here is the low. In general, it's making a series of higher highs and higher lows, and there is nothing to suggest any weakness. Remember, we just saw some weakness that pushed us down to 5,700 before the election. We saw that there could be a pullback as big as 4%, which would have taken us to 56. But during the election day, we actually saw the markets revert and then, of course, show us that bullish sign. We did talk about this in our live election stream, where we just saw structure on both Bitcoin and, of course, the US 500 way too strong before the election was called. The market's not stupid. It tends to figure it out pretty quickly, and the futures market was off and running. So now that we're at 6K, could this be a bit of a temporary resistance? Yes, it could be. Would we sell it? No. So let's have a look at the option strikes now for the week ahead. And as you guys know, 6,000 is the biggest key level psychologically, and of course also from the call options. Whether you're looking at what's happening on the 11th of November, the 12th of November, or even the 15th of November, 6K is what most people had for the year end, not just right now when it comes to where we would be basically by December 31st. So this strike here will bring in a lot of positive gamma. It'll effectively, if it is beaten out, get us going even further, higher and higher and higher. And I have seen some people claiming that there'll be 6,600 by year end, which is a pretty epic call. I don't know if we're going to get anywhere up there, but it does kind of blend itself in with this could be a temporary resistance level just because of the amount of money on the line in terms of calls. And then we will most likely bounce through it. Again, trying to time this thing is going to be very, very difficult, but just think about it as what is your time horizon? Is your time horizon days? Well, that's probably not going to be the best level yet to trade. Whereas if your time horizon is weeks and months, the market could still have quite a lot of upside. Let's move over to NVDA. We have approached that 150 several times here, and we're continuing to find a bit of resistance off the 150. We're still in positive gamma. The market is still, of course, ripping to the upside. And if NVIDIA takes 150 plus, then we have to suspect it's got even more in it. I think eventually NVIDIA is going to get to 180 at least from the kind of metrics that I'm looking at this point. Let's move over now to Tesla. Now, this had no chill. Remember, Elon is probably one of the largest winners of this week, maybe even arguably the largest business owner winner when it comes to what is going to happen over the next 12 months. And Tesla is ripping off that news. Now, I do have an interesting perspective I may talk about on our Monday live stream, so make sure to join us there for that one, because I do think that this may not last forever, and we'll go through our reasons during the stream itself. But realistically, so join us then, but realistically, going through 300 is just creating more positive gamma, and it looks like, we're sitting on another big core wall. If we manage to break through this, we could be going to 363, I think it is. We've got that on the charts coming up. And yeah, the market has no chill on this. I would not go against this trade under any circumstances. I would not try to short it. Can you take profit at key levels that you believe? Sure, but you don't want to go against that one. You're kind of going against the US economy right now if you're doing that, and that may be a poor choice. Let's move over to the US 10-year. It rejected this point. Obviously, we saw large transactions coming through treasuries, which also helps the treasuries trade, and a few people are probably looking at reprieve here. As I mentioned in the last video, the key to the treasuries position here is that people are feeling it. People were absolutely sending me messages. Tom, what's going on? It's terrible. It's gone under 92. It's going worse and worse and worse. Well, whenever I see people freaking out, and of course the sentiments shift completely in terms of people are freaking out, you always know that means there's a pain trade. People have lost their trades, lost commitment, and of course that's when Wall Street tends to strike. Now at this point, has it really changed to the upside yet? No, but we do have big volumes as we mentioned, and we're looking for a 93.30 kind of close plus, and if that happens, good news. In the other world of high yield junk, that just broke out last week as well. Things looking a lot better in junk bonds, and you can see here the downward trend line being broken above, making a new higher high, and really it looks like, again, it's risk on for the markets. And we've got to remember the markets came in with sentiment that was actually more bearish than you would suspect into the election. So that's why it's been able to rip as high as it has already. People did take money off coming into this election period. When we take a look at copper, it's kind of a mixture of two worlds. I would say it actually looks more bullish here than bearish where we're at currently in copper. But remember, it dumped, it rallied hard, it's pulled back now. This is an interesting level. Watch reaction here, about 4.35 is going to be a key zone. If we break above that, that's going to be a big news story, I think, for copper. And we'll be watching this one very closely. Again, it just really comes back to FXI and HSI though. How do we see these big Chinese companies start to perform? And are they coming out of effectively what is one of the worst recessions we've seen in some time in the big economies of the world? Remember, China's gone through a recession while many other economies have not. Let's look at the US dollar. US dollar, of course, at resistance here. Nothing much going on at this point. So I think the dollar is hard to read just yet. You'd have to say the trend is still up though overall. Gold, not bad. Good rally, good pullback. Don't mind this at all. I'd like to see gold bugs pick this one back up somewhere around this kind of 26.73 zone. It's not the strongest buy area yet, but certainly a great sign off our first bull zone that we've been leaving there for a while. This was the completion of the head and shoulders. It's actually been a very nice setup so far, and we're hoping it does better. Let's move over to silver. Nothing yet, still on support, no transactions, nothing to do. Unfortunately for silver, it's just kind of sit there and wait. And obviously, if you're holding it, yeah, we're still bullish on it over the next 12 months. So we've mentioned oil several times. In the last video, we spoke about how we thought it was looking a little bit weaker than stronger, but I'd still say this is a confusing chart. We'll come back to oil when it gets less confusing. If you're on the short though, I can totally understand why, and maybe it's going to that blue line there. So let's take a look at Tesla now, and obviously this stock just absolutely melted that 303 level. Very strong gains, all positive gamma. Do not go against this stock. If you took a bit of profit here, don't worry about it. No doubt at some point it will probably come back down. Now, why is this so important? Well, of course, Elon is one of the biggest winners of the last week, and more importantly, this could lead into 363. Basically, you do not want to go against this particular market right now. I think being bearish on that would be, frankly, terrifying. Now, what else did we mention in the same video? We talked about the core walls, both on Tesla, if it got broken, obviously ballistic, and NVDA, if it got broken, obviously ballistic. Now, 150 did not get broken, so this is the big core wall here. If we do break and close above, could we go higher? Well, the answer is quite simply yes, and I've kind of estimated between 173, 180 could be the target in the future for that stock. Now, I want to mention one that we do on the Monday streams a lot, but I know a lot of you guys don't watch the Monday streams. Some of you do, which is awesome to see there. And what we've been talking about is crappy stocks. Now, do I like Intel as an investment? No. Do I think its fundamentals suck? Yes. Do I think it's got good leadership and everything's going well? No. But that doesn't really matter. My opinion doesn't really matter. And neither does yours on this stock. Remember, it's all about replication. And I just want to mention this because this week we talked about this stock again, and it's given us actually a better return than the market itself, plus 12%. Now, is this a replicable pattern? Yes, it's actually out of our day trading masterclass in terms of setup. And what you may notice is, again, it has more room potentially to run. Doesn't mean go jump into Intel now, but it comes from that abundance mindset. If you missed your favorite stock, let's say Tesla or NVDA or something, there are other stocks to trade, and there are always other opportunities. And of course, at this stage, I'd love this thing to go to the gap fill. Let's move over to the US 2K, very strong, 2400. Obviously, 2430 could be where it finds a little bit of a sideways kind of action, but we've already seen the stats, and we kind of suspect this may do better over the next 3 months. Same thing with NASDAQ, better over the next 3 months. You'd have to say check mark. Pullbacks to be met by bull demand at this stage. You'd have to say check mark. And obviously, we had a pullback in time. So things look pretty good on all these markets for the US for now. It's like a sugar rush across the board. Speaking of sugar rushes, it's the crypto market. 2 last massive dark pool transactions we now know went through here, and the results are history. Of course, we already picked this up down here and here in terms of we thought this would be strong. Everyone in our private community, I've already had alerts for it above these highs. So realistically, this thing is absolutely ballistic. And it's probably just playing partial catch up. 32 to 3,300, you'd have to think is the next target for something like this. Very strong stuff on Ethereum, and it's happening across all of the cryptos. Look at Cardano here, even times of recording, very strong gains, but still well under where it was earlier this year. And to put in perspective, still well under where we were during the ballisticness of the last rally. So I'm not saying Cardano is going to $3 or anything, but alts are starting to fire up because guess what? The best one is going. So Bitcoin 77, all-time high. Very nice stuff here from Bitcoin itself. And you've got to kind of be more bullish on it over the next 12 months. Now, we've already shown you that the post-election pump tends to lead in to stronger gains here on crypto. And as I mentioned at the start of today's video or during it, I was talking about where do I think Bitcoin could go? Well, I'd love for you to pause the video right now and put comments down below at how high you think Bitcoin will be over the next 12 months. Now, these are just soothsaying crystal ball predictions, but obviously I looked at the law of diminishing returns and I looked at what I think it can do forward projection-wise based on previous cycle history, and I came out with 120K plus. Now, is that insane? Some of you might say it is. I don't think it is. I think people will be calling like $250,000 by the end of this rally, and I think those people are starting to get insane. But really what I want is people to call 1 million and 2 trillion a coin, 2 million a coin. Because when that happens, you know that you'll be getting in the FOMO zone, if not the full bubble pop. All right, let's move over to what you need to be looking at. US bank holiday on Monday, Veterans Day, obviously. And it will not close the stock market, just the bonds market. So just remember that. CPI on Wednesday, 8:30 a.m. And then, of course, we have PPI on Thursday. Jerome Powell annoying us at 3 p.m. in the afternoon. And then on Friday, we have core retail sales. So still a big week of news. Make sure to watch. And of course, make sure to subscribe, guys. If you're interested in finding out more about the replication patterns that have been pretty damn successful, I've got to say this week, check out our day trading masterclass, links in the description down below. I'll be writing a post-election newsletter, so make sure to check out for that this week early on our thoughts. Follow us on X, follow us on LinkedIn as well. And remember, guys, that it all comes back to understanding whether you're a trader or an investor. We do both on this channel, and it comes back to that abundance mindset. Regardless of your opinions on the US election this week, you really have to put your bias to the side and instead focus on the price action, focus on, of course, what has been, the data, the options flow, all these types of things. And I think that's really important to do. And on the channel here, we just cut through that stuff. Again, there are emotions on each side. There are all sorts of things coming through. But if you miss it, abundance, abundance, abundance. Please remember, don't chase things that you don't get good risk reward on, or don't chase things that are just stupid and you don't have the ideas behind them. That never leads to success. You have a fantastic weekend, and we'll see you in the next one. Bye for now, guys.